Now friends, let me start with the revision with respect to the amendments. First of all friends, let me tell you that this is your revision class with respect to the amendments. See, all the classes that I've already completed, and now these particular lectures which are almost over, in that particular lectures I have already discussed and solved everything which is about amendments. Okay, so for the amendments assessment year 2021, all our classes have been taught to you fully in the updated assessment year only. And always I do that. I mean, we have to, because taxation being such a dynamic subject, we have to keep on updating ourselves. This particular class, which now I'm going to take it, this particular class is only the revision part of the amendments. Okay, and that is the reason friends, I'm not going to go into the much more greater depth of each and everything. I'll take up some of the questions also for the purpose of discussion, but I'm not going to solve the entire question in detail. I mean, because in regular class I've already done it. No, so those questions also which I will take it up, but I'm going to give you only the hints that how this particular amendment exactly get implemented in the particular question and how it has to be handled, and why I'm telling you this thing well into advance, because you should know that this is only a revision class. That means this is not a substitute of your regular class. That means you should have done your regular study very properly. Regular question solving, you should have done it very properly, and only then friends you should have been coming and attending this particular revision classes. And furthermore friends, let me tell you that this is a particular class, I mean this particular class is only for the purpose of amendments. So to that extent this is very, very important, because generally friends, if you take the sum total of May and the November examination of the respective year, then at least I will say 30 marks, okay, 30 to 35 marks will directly come in the examination, okay, from the amendments itself. I mean, I'm taking the sum total of both the examination, okay. So there is a possibility that a May exam may have 20 marks and November may have 15 marks, or maybe vice versa, or maybe it may be still imbalanced, but the amendments are bound to come in the examination condition. Reason is very simple, because this is something new. Okay, I'm not trying to say that amendments are difficult. Amendments are simple, but they are because new. They are something new concept, new introductions by the government. So institute will test your knowledge. Okay, that how much you are updated by yourself. Okay, so first of all, friends, see, this is a couple of material which I have already given. First of all, see one booklet on the amendment that I have already given it to you. This is amendments for DT. This booklet is already shared with the student. Okay. However, some portion of this particular booklet may not have been shared. The reason being that this is only the revision class, so only that revision material will be shared. All the material there is no point in sharing, because then it will not. This is not a regular class that everything will be dumped to you. Okay, so only that revision booklet. So amendments assessment year 2021. Okay, and this is the beginning of this particular booklet. Okay, so let me take up all the amendments, friends, step by step. Okay, step by step, and bring it to your notice. Wherever explanation is required, I will give the explanation. Okay, now first of all, friends, in the amendments, let me tell you that for the assessment year 2021, there were basically 3 times amendments. I repeat, there were 3 time amendments. One, there was an interim budget because of the election. Okay, so some amendments was brought into the force by the interim budget. That was somewhere in the January. Then there was a full budget, that was in the month of the July, and after that, because of that lot of pressure on the government, because of some of the amendments with respect to the what should I say, investment cycle, and there was a growth requirement in the country. India, the growth was little bit going down, so those were the concerns, and because of that, the government has brought into force one ordinance. That means a small little act, okay, and through which also the amendment was carried out. So basically, there were 3 ways in which a particular our assessment year 2021 had the amendments. One, that was an interim budget because of the election issue, and then there was a full budget. So these 2, and the third one, there was a special ordinance which was passed, and a special small little act was passed which amended the necessary provisions of the Income Tax Act. Okay, and of course some Finance Act provision was also amended. Okay, so first of all, friends, let me bring to your notice that there is a change, significant change in terms of the tax rate and the tax liability calculations. Okay, so that I will take up for the purpose of discussion. Rebate under section 87A. This particular rebate, the limit has been increased by the government. Now the rebate limit is 12,500 rupees under section 87A. Okay, where the taxable income is not exceeding or it is less than 5 lakhs of rupees. So income less than this limit of 5 lakhs of rupees, now the rebate amount has been increased to 12,500 rupees. That means technically the rebate is tax liability or the rebate, that is 12,500, whichever is less. Okay, so that is the amount of the amendment. Now first of all, friends, let me take up these particular rates of taxes and bring up these particular rates of taxes discussion with you. And this is one separate supplement with respect to the tax rates, which every year I make it, and this is assessment year 2021. Okay, now see, in the tax rate, friends, as such there is no change in terms of the slabs. So the slabs remain the same, that up to rupees 5 lakhs subject to basic exemption. So different categories of the person have different exemption. Like for example, resident senior citizen age 60 and above, their basic exemption will be 5 lakhs. And if you are very senior citizen age 80 and above, it's going to be 5 lakhs basic exemption. Okay, so up to rupees 5 lakhs, the rate is 5%. Okay, then 5 to 10 lakhs, 20%, 30%. Okay, so that is a no big deal. Okay, 87A rebate, which I already told you that there is an increase in the limit where total income less than or equal to 5 lakhs, rebate is 12,500, that is maximum. So basically it's a tax liability or the rebate amount 12,500, whichever is less. Okay, so whichever is less. Okay, now friends, there is a significant change in terms of the surcharge application. There was a very high increase by the government in terms of the surcharge. Okay, and now we have 4 categories or the 4 situations of the surcharge. Okay, previously there was only 2. Okay, this is if the total income is more than 50 lakhs, then it is 10% surcharge. If it is more than 1 crore, then 15% surcharge. If it is more than 2 crores, it is 25% surcharge. And if it is more than 5 crores of income, then it is 37% of the surcharge. Okay, so this is 4 categories of the surcharge which is applicable, and highest to highest surcharge, which is a dramatic increase by the government, is 37%. Okay, and your cess is anyway the same figure. There is no change in the cess. Now friends, as I told you that there was a special ordinance which was passed. In that particular special ordinance, what was the concern? Let me tell you that this particular very high amount of the surcharge, that is 25% and 37% category of the surcharge. Okay, see, it is applicable to all the types of the assessee, which is individual, HUFs, AOPs, BOIs. This is by default tax rates. Okay, so for all of them and every other artificial jurisdictional persons. Okay, for all these categories of the persons, there is a higher category of the surcharge, that is 25% also and 37% also. Now friends, here the people who are investing in the stock market in the form of the FIIs, let me tell you, foreign institutional investors, or they are also called as a foreign portfolio investors. Okay, now these people who are investing in India in the stock market through the FII route, that way we say, or FPI route, foreign portfolio investor. Now these people got big concern because there were many portfolios which were held in form of an AOP BOIs. Okay, so AOP BOIs are also covered by this particular tax rate category in general. Okay, and so those people felt that, oh, now there is an increase in taxes in India and therefore we want to exit from India, and they started selling shares into the market. And there was a very big downturn in the stock market because of this particular proposal by the government. And then the government thought that, no, we want to relax it and we don't want to continue this kind of a selling, because in India, if like this the stock market will go down, then there will be a problem. Okay, so government said that for few types of incomes, I repeat, for few types of income, okay, particularly addressing the concerns of the FIIs and FPIs, then the ordinance was passed. Okay, they said that for them we will not have this very high amount of the surcharge, Okay, so supposing if there is a foreign portfolio investor, supposing, and if your income is more than 2 crores, then it is coming to 25% surcharge. Okay, and if it is income is crossing 5 crores, then it is coming 37% surcharge. So this was the two higher category of the surcharge. So for them, instead of this, they said that we will keep only this 15%. That means it will be only 15%. That means for them, the highest surcharge will be only 15%. Okay. So in order to bring this particular amendment, they had to pass an ordinance, and through the ordinance, the appropriate amendment was carried out to give the relief to the stock market incomes. Okay. So then this particular situation came into picture through the amendment. Okay. And 115 AD 1B income. 115 AD 1B income. Remember this very carefully. And some questions which I have already solved with respect to 115 AD category said that it is only 115 AD 1B. This is basically a stock market income. Okay. So held by the FIIs, because 115 AD is for the FIIs, and any incomes which is of section 111A, that means even the resident people will be covered now. That means you and me also, if we are investing into stock market and if we have short-term capital gains on the listed shares, then also 111A situation will come, and 112A is a long-term capital gains on the listed shares, and where all STT and all these obligations. So these types income basically, okay, for these types income, okay, it has been clarified that normally where it was 25%, for them it will be for this type of income. That means whatever is the tax on these, particular type of income. Now the surcharge rate, because this is only the surcharge clarification, the surcharge rate will be 15%. Okay, so normally which is 25. So whatever where it was 37% for this type of income, it is going to be only 15% of the surcharge. Okay, but now friends, you will have a little bit confusion in terms of doing the calculation here to identify that how exactly the surcharge calculation should be done. Okay, so specifically through the ordinance, now I'll given you some extract of the amendments also here. See, this is basically some relevant extracts of the Finance Act, okay, through which I have made this particular table. But let me explain that to you very properly. Okay, now see, excluding the specified income, this is very important interpretation required. Okay, excluding the specified income. Okay, so this 115 AD 1B is your specified income, this is your specified income, and this is your specified income. Okay, if you have any income which is more than 2 crores but excluding the specified income, then your surcharge rate will be 25%. So whatever is the tax on that income, that means other than the specified incomes, for that the surcharge is 25%. But if you have the specified income and tax on that, so if you have specified income and a tax on that, and on that the surcharge, okay, so that will be 15% as the case may be. So this is how the amendment carried out. Okay, so once again, if it is excluding the specified income, if your total income is more than 5 crore rupees, then it is normally 37%. So for example, if I am an individual, I have a stock market income also, and if I have a salary income also. But if my salary income is a very high figure, then for that the normal surcharge of 37% will come into picture. But for the stock market income, whatever the tax on that stock market income and surcharge on that particular tax is going to be 15%. Okay, so this is excluding this. If you have the income, then it is a normal surcharge. This is what I am just trying to tell you. Okay, and if there is any income, okay, which is including the specified income, you are not crossing this 2 crore rupees. Okay, so surcharge will be regarded as, I repeat, including the specified income, but you are not covered by the above provisions. Okay, so including the specified income, you are having, that means you are not covered by this 25% and 37% category. Okay, so including the specified income, if your income may cross this particular limit of 2 crore rupees, I repeat, total income if it cross 2 crore rupees, including the specified income, but you are not covered by 3 and 4. That means you are anyway not covered by higher category of the surcharge. In that particular case, your surcharge will be only 15%. Okay, so say for example, I'll just give you one particular, a very simple example. Okay, so supposing if your specified income is 1 crore rupees, okay, and say for example your salary income is 1.5 crore rupees. Okay, so your total is going to become 2.5 crore rupees. Okay. So 1.5 CR is your salary. So your 2.5 crore is the total. So you are crossing the limit of 2 crore rupees. Okay, your salary income is only 1.5 crore rupees. Okay, and by crossing this particular limit, that means including the specified income, you are crossing the limit of 2.5 crore rupees. So now the surcharge will be only 15%, because anyway your other income is not crossing 2 crore rupees, whichever way you look at it. Okay, so ultimately, friends, in order to decide the surcharge in examination, you have to look the other incomes other than the specified income, and that way you decide the higher category of the surcharge. And intention of the law is that on the tax on the specified income, the surcharge should only be 15%. I have already taken quite a good number of questions on this particular calculation also. But as I already told you, friends, that this is only the revision class, so I am not going to focus too much into the greater depth, because that is normally the emphasis which I do it in my regular class. But I will try to do the best from the revision point of view, because this is only the revision class. Okay, so let's come back here. Okay, so first thing was that tax rate. There was a change here from individual AOP BOI. Now there is also a change in the corporate tax rates. Okay, so that also I will take it up for the purpose of discussion and that particular rebate. Okay, so now let us go ahead with the changes which was carried out in the corporate tax rate. Okay, now corporate tax rate also there is a significant change, and there was, okay, now this is your corporate tax rate. Okay, now see, normal your tax rate is 30%. Corporate tax rate, normal tax rate is 30%. Okay, that way we will understand. However, if in the previous year 17-18, normally I call it as a year to year before. Okay, so if your year to year before turnover does not exceed 400 crore rupees, then the tax rate has been reduced to 25%. Okay, so there is what should I say, for the mid-size and the lower size companies, that way you can say. That means very large companies, of course, will have the turnover crossing this particular limit of 400 crores. But mid-size and the small companies where the turnover does not cross the limit of 400 crores in the previous year 17-18, normally I call it as a year to year before. Okay, so that is 25% tax rate. Okay, now friends, through the ordinance, two special tax concessions scheme have been brought into the fore. This was amended through the ordinance actually. Okay, 115 BAA provision under Income Tax Act and 115 BAB provisions under the Income Tax Act. This is a special rate of tax with respect to the specified domestic company. Okay, now first of all, friends, let me tell you what is 115 BAA companies. 115 BAA is all domestic companies. That means whether you are a manufacturing company or a non-manufacturing company. Okay, all the domestic companies, that means logically you can say all the Indian companies, okay, will not subject to this particular provision, will not get the benefit of specified deductions and exemptions. Okay, so without specified deductions and exemptions, okay, your tax rate is reduced to 22%. Okay, so even if your turnover was supposing less, normally you are coming in 25% category. Now it has been further reduced by the government to 22% corporate tax rate. But now this 22% tax rate is considering no specified deduction and no specified exemptions. Okay, and that details is there in our normal class. Okay, now further, for these categories of the companies, they have to specifically opt for it. That means they have to prefer to this particular section. That means there is a small little procedure at the time of return filing. You have to opt for this particular section, and once you have opted for this particular section, that means a concessional tax treatment without a deductions and exemption, then there is no rollback. That means once you have selected this particular 22% category, now that will bind to you. Okay, now if you go for this particular scheme of lower tax rate, then there is no minimum alternate tax. Another very great advantage for this category of companies, no amity. Okay, so absolutely no amity. That means you will just have to have now computation of total income. Amity provisions absolutely not applicable. Okay, the unconditional benefit. Okay, and there is a flat surcharge of 10%. So it is basically, we will say 22% tax rate plus the surcharge. That is a flat surcharge is provided. I repeat, flat surcharge. Why I am telling you flat surcharge? Because normally, friends, see in the corporate tax rate, the surcharge applies only when the income exceeds a limit. That means if your income is more than 1 crore, then it is 7% surcharge for domestic companies. And if your income exceeds 10 crores, then the surcharge rate is 12%. So this is subject to this particular income criteria. Okay. But if you are covered by these 115 BAA, no matter whatever is your income, supposing your income is only 10 lakhs of rupees, but still it will be 22% plus the surcharge of 10%. Okay, that is what is specifically provided in the Finance Act. Okay, now 115 BAB provision, which is also brought into force by the special ordinance by the government. Okay, that 115 BAB companies, now these companies, first of all, the tax rate is 15%. My God. Still it is reduced down to 15%, and government has really done a great job in achieving this corporate tax rate. And they have said that compared to all our Asian peers, that means you think about tax rate in Taiwan, Singapore, now this particular tax rate is almost at par and little bit less also than compared to the corporate tax rate. But friends, in India, it is subjected to conditions. Okay, so first of all, one of the condition is same as BAA condition, that no specified deductions, no exemptions. So that is already there. Okay, so that remains same. Further, now this particular BAB has extra conditions because there is a concession in terms of the tax rate has been given. Okay, it has to be a newly formed after 1st October 2019. It should be a new manufacturing company. So basically, it should be a new domestic manufacturing company. Okay, that means the old existing companies are not covered by, first of all, this particular scheme of the government. Okay, and of course you have to start your commercial production by the specified date which is provided in 115 BAB. So basically you have to be a new manufacturing company and you have to start your commercial production. Okay, within the specified time. Now this particular manufacturing, you have to employ also new plant and machinery. That is another very good important logical condition. Okay, so new plant and machinery has to be employed, and only then you take this particular basically the government wanted to promote the manufacturing sector in the country, so to create the jobs in the country, and that is why this particular scheme was implemented. Now friends, if there is a old plant and machinery which have been used, there is a second hand plant and machinery which is used, it is permitted up to 20% of the total plant and machinery. So ideally it should be all new plant and machinery, but in case if you are using some old plant and machinery as a part of your manufacturing process, so in that particular case there is a limit, that is 20%, which is permitted. And if friends it is a second hand imported plant and machinery, it will be treated as a new. For example, you imported the machinery from Germany and before import there was never used, nobody claimed ever depreciation in India. So there are some theoretical conditions associated with that, and that will be regarded as a new plant and machinery. The second hand imported plant and machinery will be treated as good as a new plant and machinery from this particular point of view. Okay, and now your tax rate is, once you start, only 15%, and on top of that there is no amity. So there is no minimum alternate tax for this category of the companies, and there is a flat surcharge of 10%. And as I already told you that irrespective of the income for these type of companies, BAA types and BAB types, there is a flat surcharge. So whatever the tax liability comes, on that you got to multiply with the surcharge. Now, somewhere friends, the tax liability calculations of the corporate is, I think, definitely going to come in the examination condition. Okay, so you should know this chapter of corporate taxation very, very properly. So you should have studied MAT, because you don't know from which area this thing will be tested, because with MAT, without MAT, now all these combinations appear. So you should know the chapter of MAT very properly. Okay, I have done that particular magnificent number of questions also on that. Okay, you should know all your business income provisions, because any corporate taxation question coming, it has to have business income effects also. Okay, so without business income effects, now only corporate taxation question can be a very, very today is quite simple. So these two chapters now has become very, very valuable, because tax liability calculation will come. And don't forget this, that there is no amity for 115 BAA companies and BAB companies. Okay. However, if you are covered by this 30% category or this 25% category, then you have a MAT application and you will have a surcharge also on merits. That means depending upon your income, how much your income is, whatever surcharge category comes to you, that surcharge you will have to apply to that respective companies. Okay. So that was one of the very good relief which has been provided, and this what the government had also claimed that this is a very big incentive and very good reform. In fact, they said this is a very big reform in India to boost the manufacturing cycle in the country. Okay, now let us go further. Okay, in terms of the amendments. So this was your normal amendment with respect to your tax rates. Okay. Now, in the salary chapter, friends, your standard deduction has been increased to 50,000. Old it was 40,000. This is amendment with respect to the salary chapter. Very simple amendment, so I'm not pushing it very much. Salaries, the gratuity exemption limit has been increased to 20 lakhs of rupees. The old gratuity, because in salary chapter, no, there is that fixed monetary limit also. That means your maximum amount of exemption is subjected to a statutory limit. So old limit was 10 lakhs of rupees. Now it has been straight away increased to 20 lakhs of rupees for salaries. Okay, gratuity. Okay. Now, friends, in the house property chapter also there is a significant amendment. I repeat, there is a significant amendment in the house property chapter, and this was actually brought into force by the interim budget. But anyway, forget about now whether interim budget or full budget, because all amendments are part of our studies. So forget it now. So now, friends, in the house property chapter, friends, the change which has been created is from SOP point of view, self-occupied property. So one self-occupied property, the annual value was taken as nil. I repeat, one self-occupied property, the annual value was taken as nil. Now it is amended. Okay. Now the government has said that you can take the self-occupied property annual value nil with respect to two houses. Okay. So previously it was one house. Now it is two houses where annual value can be taken as nil. Okay. And so that was one of the very great benefit which was passed on by the government to the people, particularly having two house properties, and accordingly it was very, very welcome amendment. Okay. Now with respect to the SOP, friends, there is also interest provisions. Interest on house property. Okay. Now, friends, the interest on house property with respect to SOP, friends, there was two type of situations. Normally, the interest limit was 30,000 rupees. Okay. And if it was acquisition or construction and it was done after 1/4/99, there was a increased limit of 2 lakhs of rupees. Okay. For acquisition of the property, and acquisition construction should have been completed in the specified time, and that kind of situation is there in the, so there were two limits. So one for the loans which was taken for acquisition or construction after a specified date, then there was a higher limit for interest against SOP. Okay. And otherwise, by default, the normal limit was 30,000 interest deduction. This is only with respect to interest on SOP. Okay. So we had 30,000 limit. Listen very carefully. And another limit for SOP was 2 lakhs of rupees, depending on the situation, how the and why the loan was taken. Okay. So now it has been said that the interest limit will be on the aggregate amount. Okay, so supposing if you had two houses, I will say house 1 and house 2. Okay, okay, so house 1 and house 2 limit will be 30,000 rupees. Okay, supposing if you are in that 30,000 category. Okay, and supposing if you had in 2 lakhs category, that means loan taken as per the specified conditions where the interest limit was supposing 2 lakhs of rupees. So house 1 and house 2 limit is going to be 2 lakhs of rupees. So with the individual limit, there is an aggregate limit. Okay, because now it is multiple house, no, two houses which will be eligible for the purpose of SOP. Now imagine a situation that you had one house which was in 30,000 type category of interest, and another house which was into 2 lakh type category interest. Okay, that means the total interest now, supposing one house was in 30,000 category and one house was in 2 lakh category, then total also there is a limit of 2 lakhs of rupees. So overall aggregate, I repeat, overall aggregate limit for the interest deduction, because now it is 2 houses, again been brought into force, that is 2 lakhs of rupees. Okay, and if you are into only 30,000 category 2 house, then total of both the house, the limit will be 30,000. So everywhere the limit is the interest deduction limit. But let me tell you and remind you once again that this particular limit is only with respect to interest on SOP. Okay, and for that this particular point is covered up. Okay, so this is all interest only on the aggregate figure. Okay, now there is another benefit which has been given by the government in the house property chapter, is that particularly with respect to the developer or builders. Okay, and rather I will not say that always developer or builder, basically all the people who are having this property as a stock in trade. Okay, so even the dealer of the property, a person who is doing buying selling of the property. Okay, so will come in this particular category where the annual value to be taken as nil. Okay, logically we call it as a unsold rent in respect, notional rent in respect to the unsold inventory will not be charged to tax. That means 2 years. Originally it was only 1 year. Now it is a 2 years enhanced limit. Okay, so old was 1 year. Now it is 2 years limit from the end. Now remember this very carefully. So basically your annual value will be taken as nil for the unsold inventory. That means annual value will be taken as nil. Benefit is given for 2 years from the end of the financial year. I repeat, it is 2 years from the end of the financial year in which the certificate of the completion is obtained from the competent authority. So it is 2 years from the end of that particular financial year. So logically it is a 2.5 year benefit. See, you imagine this way, that supposing if you got a completion certificate, so supposing you got it on 1st of June, okay, of a particular year. So 1st of June to 31st of March. So that year, whatever house property computation, it will be annual value will be taken as nil if it is an unsold inventory. Okay. And secondly, 2 complete years thereafter. So logically I call it as a 2.5 year. I mean not exact half, but it is 2 years and 1 incomplete year. This is how I just symbolically say. Okay. One more thing, the friends, that you have to remember very carefully, that this is a benefit only with respect to the notional rent. Okay. In other words, if it is not a let out property, supposing if a builder actually let out the property and if there is an actual rent, so actual rent will be taxable. Okay, so actual income will always be taxable. So however, if it is a vacant property and it is an unsold property and that kind of situation, only then this particular benefit has been given. If the property is actually a let out property and you are actually earning the income, then you cannot say that still you will take the benefit. So that kind of situation, friends, it will be straight away taxable. Okay, so that should be kept in the mind. Okay, now friends, this is one of the question, friends. This is a question which is linked with your gratuity calculation. So I don't think that this is a very important question or something like that. But anyway, as all the amendments, wherever the questions are possible, I've already shortlisted those particular questions. So this is one question from gratuity calculation, that someone retires from government service, private sector and all that. And this is another question, friends, from the gratuity point of view. Okay, and I've already told you, friends, that I'm not going to solve all the questions here because I just want to show you the main highlights and main punchline only of the solution. So this question I've already taken. Now, friends, in our regular class, friends, all the questions in detail I've already solved. Okay, so it's not that I have not, but this is a revision class, no. So my sense is not to solve all the questions in the revision class, because the revision class is only to revise the main topic importantly, quickly, as far as possible. Okay, so solution is there in your this book A, chapter ID number this, chapter name is this, and this is your video number in which this particular questions in detail have already been solved. Okay, however, friends, I will, of course, because I am taking up the revision class, so it's not that I will not absolutely do that, but I would like to remind you. Okay, so see, this is a question where we have already solved this. Okay, so solution I will just quickly show you on the screen wherever it is possible. Okay, so 1 second, and I will of course give you the hint also wherever that main punchline in that particular answer is. Okay, now see, gratuity, all this basic calculation of that salary, that limit 1, limit 2, limit 3, whichever is less. So that I don't want to go into detail. Only thing that, see, this was a statutory amount. Old amount was 10 lakhs of rupees. Now it has gone, and instead of that, the new statutory limit has come. So that is the only main part of the amendment. Otherwise, all gratuity calculation and everything is the same. Okay, so this was being the punchline. I just put it on the screen for the purpose of your, just understanding. And so that at least, once you will see that, oh, wow, this is how the calculations were done. Okay, and similarly, I think even the another question. Okay, this was another question. There also the same thing. Only thing that, see, this gratuity limit is changing. So it is only that statutory limit which is undergoing. Otherwise, answer solving is almost the same. Okay, and supposing there is a full salary computation, then the standard deduction. So standard deduction, there is an increase in limit that you have to consider. That's all you have to do. Okay, and this particular class in our regular class, because as I already told you, regular class always with the latest assessment year only I discuss. So now this is one of the question with respect to the house property calculation. Okay, and this particular question, friends, if you see in the house property, is very simple, but now we have got two houses. See, okay, we have got two houses. In this particular question, we have that fair rent, municipal rent, standard rent, and all that kind of situation that we already have. Okay, and municipal tax, we have the date of loan is given to you, and this is the date of loan has already been given to you. Okay, now compute the income from the house property and advise which house should be opted by him as a self-occupied house. So first of all, the question is asking you that which house, but now both the houses you can claim as a self-occupied house, because it is already given in the question. He owns two houses and which are occupied by him for residential purposes. So which is occupied by him, so he can claim both the houses for the purpose of SOP, no doubt about it that. But now that interest calculation will bother. Okay, so aggregate limit with respect to interest comes into picture. So 1 second, let me take up that particular solution. Okay, see, now, okay, see, we have 1 second, two houses. Okay, now friends, see, in this particular situation, actually, if I do it in a very shortcut manner, listen very carefully. If I do it in a very, very shortcut manner, I can straight away say that two houses you can claim it as an SOP. So I did not do that detailed working. Okay, but when I have done it in this particular classwork situation, I had shown you only for the reference purpose that supposing if this property was a let out property, how this particular working is required to be done. Okay, so actually, friends, in our normal class, because we spend little bit of extra time, so I wanted to show both the way calculation to the student that if it was a let out property, then how you will do, add something like that. Okay, so this working actually not required. Okay, so you can directly jump to the conclusion that now two houses are eligible for the SOP. Okay, so I'll straight away go for the SOP. Okay, so I would like to go first straight away the interest calculation. Okay, now in relation to the house 1, because this column is for the house 1 and the second column is for the house 2. Okay, so if this particular property is a SOP, and now I already know that two houses I can claim it as an SOP. Okay, now see, the interest deduction with respect to the house 1 is coming in the limit of 30,000 rupees. Okay, why? Because I will tell you. See, where is that particular question gone? Okay, see, this particular loan was somewhere in 98. That means it is before 99 cutoff date. So this house loan, now this is SOP. So interest only deduction will become very much relevant. So limit of interest deduction, because this interest limit deduction is only for SOP. For LOP there is no such limits. Okay, so limit is going to be 30,000. Okay, so your interest for the year is 1,10,000, but this will be restricted to 30,000. Because there is a limit with respect to every house also, and there is a limit with respect to the total of the interest also. Have you understood that? And this particular loan with respect to the second house, and if you want that, you assume that this particular loan was taken for acquisition, construction and all that, because higher SOP limit. So house number 2, the SOP interest limit is going to be 2 lakhs. Okay. Now, this is how much? 1,80,000. So 1,80,000 is not crossing the interest limit of 2 lakhs. So we will say in respect to house 2, you can get interest limit deduction because 2 SOPs are allowed now. So you will take the interest deduction as 1,80,000 rupees. Okay. But now if you will take the total 1,80,000 and 30,000, the total will become 2,10,000 because now interest with respect to both the houses. Have you understood that very carefully? And therefore, the aggregate limit will now come into play. That aggregate limit of interest with respect to both the houses, that will also come into the play, and that is the part of this particular question. Okay. See, for house number 1, it was 1,10,000, but SOP limit comes to 30,000. For house number 2, the SOP limit is interest limit deduction is 1,80,000. So it is 1,80,000. It is not, sorry, limit is 2 lakhs, but the interest, actual interest is 1,80,000. So not crossing the limit. Now total is how much? Total is 2,10,000 interest limit. Okay. But now there is a total limit, interest limit also, because it is 2 houses, that is 2 lakhs of rupees. Okay. And therefore, you can straight away jump to the conclusion here that your interest deduction total of both the houses will be 2 lakhs of rupees. That means the net house property loss will be 2 lakhs of rupees in this particular circumstances. Okay. So this was one of the main point in this particular question. Now on this particular point in the house property chapter, friends, we also have a very, very detailed question. This is a very beautiful question. Okay. And this particular house property question, which is a very, very beautiful question. Okay. Now, here in this particular question, of course, I told you that I don't want to, what should I say, solve the entire question because this is only the revision class. Because in my regular class, I have done it into all this greater depth. Now, if you see this particular question, but I will explain it and give you the hints of every question so that, you know, even revision purpose, now when you will be very fresh and you will be going for the examination, you will remember, yeah, oh, I already done that in that particular classes. So, I mean, just to refresh your memory, friends, I'm just showing all these things. Now, this Mrs. Rohini, so she is basically citizen of USA. And in this particular question, now she owns a house property at USA, Los Angeles. So she has got one house in USA. Okay. Then she has got another house in Mumbai. Okay. This is for her residence. So she got one property in USA. She's got a second property in Mumbai. Okay. And she has got another flat in Chennai. That is a third flat. Okay. Which is again for self-occupation when she is in India. And her parents stay in that particular flat. Okay. Now, the flat was used by her for so and so purposes. Okay. So, basically in this question, there are 3 properties. And she already had one house as a stock in trade with the intention to resell it in Bangalore, which was sold in the March 2014. So, one very old house was there, which was already sold even before that. And for that, I think she is getting some arrears of rent. So, this is the 4th transaction. I will say it is not a 4th property because during the previous she doesn't own it, but she has only got the arrears of rent with respect to this 4th property, but she doesn't own it because it was already been sold years before. Okay, but she got arrears of rent of that. So effectively, friends, she has got 3 properties here. Okay, in this particular question. And now, since she has got a 3 property, okay, now the net question which is coming is compute the income chargeable from house property. So ultimately you have to compute the house property income on this particular front. Okay. And she is desirous. That means she intends to claim USA property and the Chennai property used for the purpose of residence as 23-2 SOP. That means she wants these 2 particular properties as SOP. Okay. So USA property and the Chennai property. So she wants this one as SOP and where is the Chennai property gone? This one. Okay. She wants to claim these 2 houses as an SOP. Okay. So, can she do that? Now, in this particular question, friends, one of the valuable point is that in this house, Chennai house, her parents are staying, she herself is probably not staying. So can we say that this is an SOP? So what is the scope of a SOP? Now this is also become little bit debatable, but I will go with the view that her parents are staying, so it is actually self-occupied. So it need not mean that you yourself actually be staying. I mean, see, this is not a let out property, but your parents are staying. But this is very, very debatable. So at the professional level, we debate this particular point, whether this can be taken as an SOP itself or not. By itself can become a question in a typical situation. So for that, first of all, 1 second, because I think I had given it somewhere. One second, baby, let me scroll. Yeah, see here. I've already given it to in this particular supplement also. This is actually the meaning of your self-occupied property. So self-occupied property is defined under this particular clause, because what is a self-occupied property? Normally people don't focus on this particular area. It is occupied by the owner for his own residence, okay? And if it can't be actually be employed by him, can't be occupied by him, sorry, owing to the employment or business at any other place, at place he resides in a another place where the house not belong to him. That means because of your employment purpose, this house could not be employed, it could not be occupied. It can be regarded as an SOP. So the main point here is that it should be for your own residence by the definition of the law. But in our question, the parents of the assessee is staying in that particular house. So can it ever be taken as an SOP itself, first of all? By itself is a question, as a matter of debate in the house property chapter, but people don't tend to go into this much of depth. And let me just tell you that here you have to write that it is a view that which is famous, that even if it is used for the assessor's parents, it can be taken as an SOP. Okay, so basically, technically, if you go, it should be only for your own residence. Okay, this is how the law is specifically saying. Okay, so this is a debatable view, but we will go with the view that, okay, it can be taken as an SOP. Okay, now friends, ultimately she is desirous of claiming this two property as an SOP. Ultimately, you have three properties. Okay, so how will you answer this particular question? And with respect to every house, you will have, listen very carefully, with respect to every house, you are also going to have, if you are claiming SOP, that interest limit and all that. Okay, so you have 1, 2 and 3 house. Listen very carefully. Now you have to do the computation in this particular question. If it is a let out property, what is the amount chargeable to tax? So this will be your one answer. You have to compute it that way. Okay, then you will compute another way, that if this is an SOP property, what will be the income chargeable to tax? Okay, so you have to go with a situation that if this particular house, you then take it as an LOP, and these two particular house, because now the total limit is to be considered for the purpose of SOP, okay, and what will be the net computed income? Have you understood that? What will be the net computed income? And accordingly, you have to prefer this. You understand that? Because here these two are SOP, again that aggregate interest limit will also come into picture. So you're going to beautiful question with a 3 house property kind of a situation. Then you have to take it at like that. That supposing 1 second, let me change the ink color, darling. Yeah, okay. Now supposing if you take this particular house as the LOP, or you can take it as a dim let out property, whatever you want to say, and then you will take these and these two houses as the SOP. Okay, what will be the amount net figure computed as the income? You have to take it as. Have you understood that? Okay, and accordingly, then the third house also you will have to take it up. Okay, supposing if you take these as the LOP and if you take these two as the SOP, then what is the net figure computed? Have you understood that? And accordingly, you have to take the decision that this combination is the best. Okay. However, you have to answer this particular point also, that she is desirous of claiming the USA property and Chennai property. Now, if she wants that I want only this particular option, okay, she can go with that. Because now we have taken the view that the Chennai property will be eligible for the purpose of being an SOP property. So once we have concluded that, so we will advise her that if you want to do like that, you do like that. but I am a chartered accountant. So I will be solving the best way that this combination may not be the good combination, but I will tell you that another combination is a good combination. Then you, if you want, you can change your mind. Okay, so this is how a detailed computation has to be done, and detailed discussion for this question with each and every point and all that. It's in my book A, because as I already told you that my study is book A and book F. Okay, and in that these all chapter ID numbers and video ID numbers and question ID numbers. So these are all the relevant ID numbers. So if you want to directly go, you can go to this particular class which I already have, in which the detailed discussion is of course there. Okay, and let me show you that particular answer basically in a very quickest possible way. Okay, so this is the answer. Okay, 1 second. Okay, now see, this particular is the answer where I have already done the computation, assuming first of all that it is a deemed let out property. This is how I have already done that particular computation. Okay, so had it been that way, then what is the net computed income? So that I have already done it. Okay, and supposing if this particular house is SOP, then only that interest factor will come into picture. So this is only your interest factor. So these figures I have already kept it together simultaneously if this is an SOP. So if this is an LOP, then this is the answer. Okay, and this interest total subject to this particular interest limit, if this is an SOP, this will be the net figure. Okay, then I have already tried this particular combination, that one of the property I take it as an let out property. Okay, other property I take it as an SOP, so I'll have an aggregate limit also. So this is my aggregate limit which is already considered. Okay, so that is a combination that two houses are SOP, one house is a deemed let out property. Okay, and accordingly my net profit or loss which comes into picture. Okay, then I also have this particular arrears of rent. Okay, and that one particular property which was a stock in trade. 1 second, let me check in that particular question. See, there was also one property. Yeah, see, this was another house. Okay, now that particular in Delhi was already there. 1 second, the sale proceeds of this house was invested in 3 houses in Delhi, and she had an intention to resell it, and it was something like held as a stock in trade, and these particular houses annual value is to be taken as nil. However, if the annual value is taken as nil, then the interest deduction could be allowed with respect to that stock in trade type property. So that was basically part of the interpretation, and this net figure has been computed with respect to that. Okay, and accordingly this is one part of the computation. Okay, this is one part of the computation. Similarly, second combination, another two property SOP, this one has deemed let out property. And similarly, friends, I have already solved this, and thereafter you will decide that whichever is the best answer. Okay, so in this case, you will say that where it is a maximum loss, because from taxation point of view, loss set off benefit you will get, no. So whichever is the tax maximum loss, you will say that this is going to be your best option. However, if you want your particular option, you take your option. As simple as that.